Yeah. Russia is actually not just any pushover country. It is one of the biggest commodity producer in the world, one of the largest oil producer as well. And because of the economic strength, yeah, cutting them out of the US dollar access, yeah, cutting them out of the Swiss system, yeah, it's not something that should be taken lightly, yeah. Uh, it has dampened the confidence in the US dollar by a very big margin, yeah. Countries like Saudi Arabia, for example, yeah, they are currently trying to move more and more away from the US dollar. And countries like China, for example, which is currently the second largest holder of US Treasury bonds, yeah, are actually no longer buying US Treasuries. And they are actually buying more and more gold because gold has got no counterparty risk. What does that mean? If you hold gold in your hand in your country, nobody can take that away from you. Yeah, even the U.S. themselves are not able to get a hold of your gold. Now, also something that's very interesting lately, yeah, countries like India, for example, have repatriated their gold from the Bank of England. Yeah, India's gold was held. A part of India's gold was held in the Bank of England. Yeah, and India has actually repatriated, meaning they brought it back to India. Yeah, for safe holding and safeguarding. You can see that the confidence is no longer with the West. Yeah, when it comes to having trust in the financial system. Now, as a result of this, yeah, more and more people are moving away from US dollar asset, yeah, and more and more central banks too are putting more of their sovereign wealth into gold, and this has been one of the main reasons why gold's price have been moving north, yeah, going higher and higher, and recently, yeah, we could see that gold started shooting up again, yeah, amidst the Middle East crisis. Yeah, we have yet another uh, conflict front in the world. Yeah, not just the Ukraine, but now we have the Middle East crisis in play as well. So yes, the fundamentals affecting the price of gold has changed. Yeah, the overriding fundamental, how should I say it, factor, yeah, affecting gold currently is the geopolitical stability around the world. Yeah, um, things that are happening in Ukraine, things that are happening in Middle East, and not just that. Yeah, recently we recall, yeah, Blinken, the State Secretary of the U.S., went to China to warn China against trading with Russia because of certain what they call uh, dual use commodities, yeah, things that can be used for civilian and military users at the same time. So yes, out of that conversation that Blinken had with China, yeah, there was a threat made, yeah, to China as well, and that threat is uh, there could be sanctions, future sanctions against China. Now, if I were in China's shoe, yeah, I'll be looking at my uh, my treasuries, yeah, my US dollar treasuries that I have bought in the past. China still holds more than $800 billion worth of US treasury bonds. And I'll be looking at them and say, gosh, I wish I can convert all of this to something that is more, that is safer. Yeah. There could be commodities that I can use to manufacture goods with in the future, or there could be gold that I can hold, yeah, in my central bank, yeah, so that the US and other Western countries cannot get their hands on it. So this is what has been going on that has been keeping the gold price high. Yeah, how high I do not know, and when it will reach its peak I do not know, and that is why I keep in close touch with somebody like KEL, who does a lot of analysis, both technical and fundamental. And the one thing that I like to time and again, cross path with KEL is to double check what I think is going on in the world. Yeah? It's always good to have a second opinion so that I can know whether I am on the right track. And I myself, I like to know when is a good time for me to sell my gold. Yeah. So yes, basically that is what I think about gold. And yeah, over to you, KEL. If you have any question, please go ahead.
All right, thank you for sharing the last 10 over minutes. In fact, people are asking me, wow, your voice is very mesmerizing and you have a very smooth voice. Yes, indeed, we do know that at the moment now, the US dollar is definitely the accepted world reserve. And despite what has happened, all right, we can see that the US dollar has been climbing, all right, although recently there was some selling. And it seems that there could be a chance of a rate cut in September. So in your opinion, do you think that there will be a rate cut coming September?
There probably will be a red card, yeah, before the election. Yeah, some people speculate that it could be as soon as September. Yeah, but red card or not, I mean the fundamentals are still there, meaning the geopolitical uncertainty are still there, especially if if you don't mind, KEL, I'll touch a little bit on Ukraine. Yeah, which is putting more uncertainty on the whole geopolitical scene. Yeah. Now the Ukraine war has conflict. Yeah, I should say has reached a stage whereby it is quite critical. Critical in the sense that Ukraine seems to be running out of manpower. Basically, they're running out of soldiers. Yeah, they have been sending men who are even over 60 years of age. Yeah, and teenagers as young as 15 or 16 to the front line. Basically, Ukraine. I actually follow quite a few sources. Yeah, out on Twitter or X. Yeah, who have reliable information. Yeah, and out of this, I gather that there have been losses as high as 500,000 soldiers from the Ukrainian side. Yeah, and as such, they're running low on manpower. So it's not just the fact that Ukraine is low on ammunition as well, but they are running out of soldiers. So now the danger of all this is NATO is heavily involved in this. Yeah, this war is actually a proxy war that is supported by NATO. NATO has been sending NATO, meaning the European countries and the US, yeah, including Canada as well, have been sending arms supplies and money to Ukraine to support the war. Now, the scary thing is both sides, yeah, both Ukraine and the NATO side thinks that this war is an existential war, meaning any party that lose the war, yeah, their existence will be in danger. Yeah. So nobody can afford to lose this. Not Russia, not NATO. So this war could escalate, especially now that it is coming to quite a critical moment, yeah, in the stage of the conflict, whereby, one side could easily lose, yeah, and it's scary in this sense.
All
Now,
right.
yeah,
Ben, I
sorry, Kel.
just to hijack you a bit. I know that you can go on and on with your sharing with this Ukraine thing itself, but I need to bring you back here itself. Was today is about the global de-dollarization has started according to your content for today, and you are saying that gold will be going to the moon, as you mentioned. Now, of course, a lot of people have been following what's happening in the current situation in Ukraine. But of course, ever since the start of the war until now, we are entering our second year, not going to third. All right. So the question will be is that, as you just heard yourself, that you believe that no one is allowing themselves to lose this battle, this war. In fact, because shall the NATO is to lose this war, the money that is involved will be totally gone. And of course, with Russia holding on to gold and the crude oil, so what do you think will happen if, let's say, for some reason, NATO decided that they couldn't continue the war? What will happen to the dollar, will happen to the crude oil and gold?
BRICS have been making a lot of progress lately. When I say lately, is over the last 2 to 3 years. BRICS as in Brazil, Russia, India, China, yeah, and South Africa. Now, there is going to be a big meeting coming up in August, which is next month. Yeah. I do know that up to now, yeah, the framework for something that is an alternative to the SWIFT system, yeah, has already been drawn up. It's called the M bridge, yeah. M as in the capital M for money, yeah, M bridge, yeah, that's what it's called. This will be an alternative to the SWIFT system, yeah, which is basically the US dollar trading system. Now, most of the framework has been laid out, yeah, although no one really know what the full detail of it will be, but apparently it actually uses blockchain, yeah, to trade between countries using their own local currency, meaning yes, you can trade in rupees, in yuan, or in Russian rubles, yeah. And this will be affected through blockchain, meaning something similar like crypto. But the difference in this is at the end of the day, yeah, when they tally up the balance of trade, yeah, if there's any surplus or shortfall, yeah, that will be made up with physical gold apparently, yeah, and the gold will be held in respective countries. So from what I've heard about the M-Bridge system, yeah, gold will be an integral part of the value of currencies, yeah. That's why now the thing is, it is very hard currently to move away from the SWIFT system because it is a legacy system. Yeah, people are very used to it. It's got all the bugs worked out over the years. Yeah, it is expensive. Yes, it is slow. Yes, but it is something that is well known. Yeah, people trust it. Yeah. However, that trust is evaporating quickly. People are afraid to use both the Swiss system and the US dollar. And on top of that, yeah, when you use the US dollar, what you are actually doing is you're carrying part of the inflation weight for the US economy. That is how the US is able to make the rest of the world carry the burden of its inflation, yeah, and not just that, carry the burden of its military expenditure, yeah.
Okay,
If
I caught the word from
not
you that
sure,
is
yeah,
the,
I'm
yeah,
sorry.
sorry, I caught the word inflation, and I want to bring this up because I think this is something we just saw 4 months ago, where someone on this Reddit was saying the comparison of prices. You can take a look, everyone, on the screen right now. You can see the example, things that they purchased it back in 2022. Example, the Pepperidge Farm whole honey wheat bread. It was at $1.98 US dollar, and now it's as high. You can see bigger. Okay, you can see that. You can see that the price now is at $3. Oh, okay, let me make it so big. Okay, so it's like this bread itself was at 198, and now it's at 384. That's almost 100% jump. And of course, yogurt example was 362, and now it's 533. and orange juice went up from $1.74 to $3.98. That's more than 100%, right, in the span of just 2 years itself. All right. So what we are seeing from the mainstream media, the official data shows that our inflation, our CPI data, is only up by 3%. So I kind of want to ask is that what is happening over here? Why are we having official number at 3%, but yet the people like us or people in America is suffering with this inflation? What do you have for here, Ben?
I actually, to be honest with you, Kel, I have always had this suspicion about the official inflation numbers. Yeah,
Mm,
and bear one thing in mind: we are close to a major election in the U.S. Yeah,
okay.
and I believe there has been a lot of manipulation. That is why what you have just brought up, yeah, which is this guy who actually bought something online from Walmart, yeah, back in 2022, and when he clicked the repurchase button just quite recently, yeah, that's the kind of price increase that you see. This is the
Oh,
kind of
this I think
inflation.
you are referring to the, okay, let me just find that one for all the viewers. I think you and me have spotted that particular
Yes,
video that went viral recently, regarding that the how much the guy was he spent. Okay, let me play the video. Okay, I think this should be the one. I not too sure. Is this the one? Is this the one
yes,
that you are
correct.
referring to? Okay, let's watch this video.
I just like looked through my Walmart history and I found this like Walmart order from 2 years ago for the whole month worth of groceries. 45 items, cost $126. A whole month of groceries just for babies. But I did notice this reorder all button. I wanted to see how much it would cost now. Now, this order of 45 items for 1 month would cost $414. That is 4 times more. How the fuck? How? Like, what? I just like
Okay, I pardon pardon the language there, but nonetheless, it's a very big jump. Trying to hold a screen to show them the first page here. You can see that. So in 2022, he purchased the items for $126, and when he reordered his same exact grocery, the 40
Correct.
items, it came out with $414. That's almost 3 times. My God.
Yes,
All
correct.
right. So what do you think is happening here? As you said, you are kind of skeptical with the official data, right, Ben?
Exactly. Yeah,
Hmm.
exactly. In fact, we do know one thing, yeah, that is the basket that is used to calculate inflation, yeah, has been changing, yeah, over time. So this is one of the ways in which they have been trying to hide the real inflation numbers. And the other thing too is the employment numbers, yeah, which I find it quite dubious as well. Uh, of course, I mean, this being an election year, yeah, one thing that we do know is that the U.S. federal government has been spending a lot of money, yeah. In fact, there's $1 trillion of deficit being spent, yeah, for every 100 days. That's how quickly the U.S. official debt has been going up, yeah,
Hmm.
and this has been propping up some of these numbers, yeah. Um, in a way artificially, yeah, it's not sustainable, and there will come a time when there will be a reckoning, yeah.
Mhm.
But I think the general philosophy of what we can see is to kick the can down the road further, yeah. In future, somebody else's business, it may not be my problem, yeah. But the bottom line to all this is it is not sustainable, and there will be a time of reckoning. And this is
Okay.
where I think, yeah, we
Mm.
will see a major movement in the price of gold, yeah, especially when the trust for the current financial system, yeah, uh, basically we're talking about the US dollar ceasing to become the reserve currency of the world. Yeah.
Mhm.
And I, yeah, I think
I can
what's
bring
the
it.
name of that guy? The um, the Credit Suisse financial analyst. What's the name? Is
Oh, no, just sack, is it? But he left, right?
yeah. Well, after Credit Suisse was sold off, I mean, he lost his job as a chief
Yeah, I
financial
understand that.
analyst.
I can dig it up on the site
Yeah,
though,
I
but in
just
another
can't
spec.
remember his name now. Yeah,
Yes, correct.
but
I mean,
he was talking about this as the Bretton Woods and number two. Yeah, Bretton Woods is the financial system, yeah, that has been created to manage world trade after the Second World War. So he was referring to this event as the next Bretton Woods system, meaning the system that will come after the US dollar. And he is also one of the people who does believe that gold will play a prominent part in the global financial system again. Yeah. And to me, that is when I think that the biggest jump in gold price will be when the day of reckoning comes. Yeah, when the full value of gold is recognized, and I don't know when that will be. Yeah,
okay, I
but
found you for him. The guy's name
yes,
is
that's him.
Zoltan.
That's
Yes,
him.
Zoltan Ponsa.
Ponsa,
Right.
yes,
Yes,
yeah.
this guy. Yeah, he's a
That's him.
very very I put it this way, a daring analyst, yeah, who basically sees the market from a very different angle. And he was one of the few who came in very early to talk about what happened, the so-called the CDO crisis before we have the breakdown. And in fact, he came in again in 2020 or 2019, in fact, to give a warning of what's happening before we had the COVID. And he was kind of spot on, right? There's really
Yes.
a rock star. I would say he is a rock star of the financial market because he's really very daring with his market views. Yeah.
Very well known and very respected, yeah, for his work. Yeah. So
I was
this
looking at
guy is worth taking note of.
Yes, understand. Right. So I'll bring everybody to this thing right now. Take a look. This is the US inflation data since 1915. All right. So we can see that we are now apparently, okay, despite what we just heard a lot on all the videos or the groceries, we are now actually having this whereby the inflation is seemingly going down. So there's a question mark here as well. While people is having issue with their grocery like this, paying way higher for their things, but we have the US inflation going down. And of course, as we all know, that if the inflation data is going down, then most likely, right, the Federal Reserve will have the right excuse to cut interest rate. Now, I was asking people around me, and I asked them, look, if Federal Reserve is to cut interest rate, okay, in September, now it's going to be very close to the election on the 5th of November, then that will rub some people to feel that probably the cutting of interest rate was on purpose, a request by some party, and that may actually hit the market. All right, although people welcome a cut of interest rate, or that's basically been relieved some what they call the costing for everyone, but it may actually throw weight to the other side. That's one thing. Now, one thing we know what happened on 13th of July, we will have the ex-president, Donald Trump. He was shot at, and fortunately, the bullet grazed past his ear instead, and he survived that assassination attempt. So the question now is that, do you still think that with all this thing right now, and America seems to be the pole is shifting again, and towards Donald Trump for what he had done, because he threw the pump up fist, all right? Do you think that now maybe they may not want to cut interest rate because they don't want to rock the situation right now? Do you think it will be possible?
It is possible. But personally, I still think that the the Biden administration will want to have at least one cut, one rate cut.
I see. I see.
More so I think the Federal Reserve also need to defend their credibility, because they did mention that there will be some rate cut this financial year. Yeah,
I
and
see.
think
Would they like purposely do it in November, was after the US presidential election?
probably not November itself, because I believe if it is done, it is done for the done to support the current administration. The Biden administration will be the one putting pressure on the Federal Reserve to try to cut rate,
Okay.
before the election, so that it has how shall I call it? It has time to maximize the benefit, to the current administration, to
Okay.
show the American public that the administration can do magic. They have this Bidenomics, if you remember that term. Bidenomics is working. That's what Biden was saying at one point in time. So
Understand. In fact, he took a lot of credits for the current inflation curve right now, saying that he put in a lot of jobs into the market, and he also says that he brought down inflation, which we have. I have some different views on this. I'll share with you right now. You take a look on the screen. This is the crude oil chart in blue versus the one in candlestick, and that's gold, right? So we do see the relevance here is that when the crude oil price was basically surging back in 2001, we saw gold also mounting up at the same time. And in fact, they were so closely related back in 2011, as you can see right here on the screen. So the question is this right now, there seems to be a very strong decoupling between the crude oil and the gold market right now, because they used to be pretty close. Now, the question is, with the dollar no longer being used for the petrodollar, all right, do you think that because of that, that is causing the crude oil price not to be going in line with gold? Or do you think that, right, it's just a matter of time for crude oil to basically chase after where gold has been going?
Good question. Personally, I would tend to, I would like to think that crude oil will chase after gold, for reasons of geopolitical stability. I mean the same reason that gold has been going up. Can be the same reason to push the price of crude oil up as well. I mean, if
Okay,
there's
so if
gonna
you look at
be,
that, then what will be the level you think that crude oil could be going? Where do you think it will be heading to?
I'm sorry, come again, Kel.
Where do you think that the crude oil will be heading?
Good question. I don't know. If things break out, for example, in the Middle East, if Israel, for example, takes its army into Lebanon, and have a full-out war with Hezbollah, oil can easily go to $100 and beyond.
$100. Now, where are we right now? We're at $81 on the
We're what,
cash market.
82, 83? Oh,
Yeah, 81.61 as of now. The gold price was 24.27, the cash market. So now let me ask this on the same chart right here. We do see the very incredible what do you call the way the reaction of both of them seemingly goes together, right, in tandem. So if you're telling me that crude oil will go to $100, okay, we'll just put it there, $100. All right, that will be a upside of 25% from where we are right now, right? So are you telling me that gold will also be up by another 25%?
possible. I mean,
That
there are
will be a
ways,
very high level.
various ways to look at it.
Okay.
It depends on the severity of the situation. I mean, one of the worst scenario for the U.S. economy and the U.S. dollar is the U.S. dollar losing its global reserve status. That would be the worst case scenario, in which case you will see hyperinflation in the U.S. and gold price would go possibly very high up. Now, if you look at some of the gold expert like Jim Rickards, yeah, Jim Rickards is a very well-known author. Yeah, he wrote the book called Currency War. Yeah, which is a bit like a Bible. Yeah, for geopolitical analysts. Yeah. Now Jim Ricard, yeah, is of the opinion that if the US dollar loses its a global reserve currency status, gold may be revalued to the same amount of debt that the US dollar, I mean the US federal government has. For example, he was taking the amount of M1, which is the amount of cash that in US dollar that is available, versus the tonnage of gold that the Federal Reserve is supposed to have, the Federal Reserve is supposed to have around 8,200 tons of gold, If you take the total M1 supply of US dollar worldwide, and divide it into the amount of gold that the Federal Reserve has, Jim Rickards came up with a figure amounting to something like 15,000 US dollar an ounce. I mean,
Oh,
those
wow.
are crazy numbers.
15,000. Wow.
Even a go back like me dare not hope for such numbers. But those are some of the
Okay.
numbers that have been thrown
Okay,
up
I
there.
will not write it down, but I just don't mind hearing you out. Yes, I know that Jim Rickards. I saw some of his video. I mean, I heard that he have a very incredible
Yes.
stuff like that. I did the mathematics for all of us, and the number shows that we are possible, yeah. If the crude oil price now stays at $81 and to travel to $100, based on the potential of they go in tandem, that means that crude oil will go up by 25%. And that will give gold to be at 3033. Wow, that's a very high number. Now, I personally am looking at 2868 now. And back then, remember, I was at the gold was trading at 1,004, 1,005. I was giving a figure 2218. And back then, so many people was calling me crazy. I mean, well, that's my brand too, by the way. But the thing is that now we are at 2,400. I kind of realized that we don't seem to see the type of craziness to jump to go shops, all the jewelry shop to go and buy gold. Now, it's contrary because back in 2011, when I was calling for 1850, when I was trading about 1,001 back then, or 1,003 back then, and if you remember, in 2011, there were a lot of people, in fact, in China, Singapore, Malaysia, everyone was basically driving in or flee to all the jewelry shop to buy gold, all right, or gold ornaments, any jewelry is there. So the question is that if gold is going to $2,000-$3,000, my God, I think that a lot of us will probably consider to just sell all our stocks and buy gold. Do you think so?
At that price, I myself, I could be selling some of my gold.
Yeah, I think so too. I think by the time if gold do come to that point, I think we'll come another session that people don't buy gold. Okay. All right, sure. I want to bring audience to this particular chart, and I think that this is something that we need to watch very closely. And this is the US unemployment data versus gold chart. Now, I want to bring it in because this is kind of important to anyone who is serious into trading in the market. Now, you can see on the screen, this is from this 1973, right? There's a long time history all the way to today's number. Now, every time, one in blue is the current unemployment data. You can see that now we are at about 6.8 million people unemployed in America. And I cannot help to notice that whenever there is a uptick on the US unemployment, you can see that, okay, almost every time there's an uptick on this US unemployment, we can see gold moving higher, right? Almost every time when we see the unemployment data going up, gold price seemingly became a thing to buy, all right? So I kind of figured out the reason for that is because when the unemployment data start to climb up, right, that means the economy is not doing that well. There's a rising concern there. And with the new president coming in, it could be a change of party going on. They may really have to basically, cut interest rate at a dramatic point. And that obviously will cause the dollar to drop. And when dollar do drop, we will see crude oil price going up because of the relationship of that. And that will also propel gold trading higher. So do you agree with this entire analogy that I just shared?
Yes, absolutely.
All right.
Absolutely. I agree with that. Yes.
All right. So I think for the audience online right now listening to us, you should know that it's just a matter of time for the US to basically cut interest rate, and they need to stimulate the economy to make sure that things are going fine. So of course, that's come the question, if they were to cut interest rate, that will technically benefit the economy, right? But how about the
Yes.
stock market? How about the stock market? Do you think that the stock market will benefit with a cut of interest rates?
Logically, it should, yeah. However, now the question is, when we look back into history, and whenever the Federal Reserve cuts interest rate, the economy normally takes a dive. Yeah, in reality, that has been what has been happening in the past. Yeah, when the Federal Reserve will only cut interest rate when things are really bad. Yeah. And that's the reason why in the past, whenever the Federal Reserve cuts interest rate, the economy actually plunges. Yeah. And good question. Logically, you should think that if interest rate is cut, money becomes cheaper, credit becomes cheaper. People can go and borrow money to invest, either in the real economy or in stock. Either way is good for stock prices. So logically, yes. I mean, you would think that it'll be good for stock, But if you look at historical data, every time the Federal Reserve cuts rates, the economy is in bad shape. So I don't know whether the horse will be pulling the cart, or the cart will be put in front of the horse this time. I don't know. I don't know the answer to that, Kel. But like I
I
said,
like the
logically,
analogy, in fact. If you
yeah.
look at the chart right now, the one I just placed up for everyone, this is the US unemployment data versus the stock market. So you can see that since we have two events on the chart right now, what happened during the Lehman crisis, and also what happened during the pervasive sickness back then. You can see on the screen that when the unemployment data start to creep up, right, you can see that the stock market get slammed. It happened again. Of course, that was during the COVID-19 period. So people say that this is not accurate. But we can see clearly now we are having the unemployment data seemingly going up. And the stock market is still going up at the moment. That means that it doesn't really care. But if we take away this drawing and we replace it by the US Federal Reserve interest rates, let me just bring it for you now. Okay, the US Fed fund rates. You can see that what you just said is true. It seems that it happened. Let me just bring a little bit to what happened back then. So this is the US interest rate that was at about 5.25% for quite a period of time. And back then we can see that the stock market was surging all the way. And what happens here is quite interesting. The moment the Federal Reserve start to cut interest rates, all right, we can see that from the screen, the stock market began to nosedive, all right? So if you look at it again, similarly, somewhere around here, that was before. Once they cut interest rates, the stock market dive, okay? So now that is the reason why a lot of people are saying that, and they couldn't understand how can the cutting of interest rate be detrimenting to economy or the stock market. So you look at it now, you can see that the Federal Reserve and the stock market actually are coming to a point of where it's really pushing itself to a new high every time, while the interest rate is kind of flat at 5.25 at the top. So if there's going to be a cut of interest rate, the speculation that people believe is that the stock market will fall. And the only reason for the Fed to cut interest rate is because the economy, right, is not doing well. But then from what we're seeing right now, the manufacturing is doing well. We see the NFP data is pretty good and stuff like that. But in the real world, the unemployment data is actually rising, which doesn't really make sense here. So, and we have this Hindenburg effect on the stock market right now. We have stocks going up, the stocks that are hitting record high versus stock that hitting record low is getting bigger and bigger, the ratio, right, on the ladder. So overall, right, it does give the warning that there could be a recession that will happen next year. Ben, what do you think?
I think you're very right there. I mean, all the signals are there that the economy really is in a bubble, yeah, and that bubble is unsustainable, yeah. If you look at the banking industry, for example, I personally do believe that that could be where the bubble could start to break, yeah, again, yeah, like in March last year when we ran into some problems, yeah. But that problem hasn't gone away. In fact, that problem is now bigger than ever, yeah. And because it's an election year, I don't think we will hear very much about it until that problem becomes uncontrollable, yeah. So I still think that yes, this bubble has. I don't see how it can be inflated very much more. Yeah, it's like a balloon that has been blown that many times bigger. Yeah, if you look at the PE ratio now, yeah, it is at a scary level. Yeah, it is due for it is due for a correction in my view. Yeah, and maybe even a prolonged recession. Yeah, I don't know when it will be. Yeah, I don't know how to time it. Yeah, that's why I'm always listening to KEL when I have an opportunity. Yeah, so that I can more or less sync what I think with what he thinks as well, to try to get the timing right. Yeah, but right now, yes, KEL, I do believe that we are due for a correction. Yeah, I do believe that the bubble that we are in, yeah, is not sustainable. Yeah, it shouldn't be able to go on for too much longer. I don't know.
Okay.
What do you think, KEL, in terms of timing?
Sorry, I mean, I'm a bad market timer myself, honestly. I just look at the chart. I'm pretty good with gold, but come to the stock market, I think that I need to make sure that I get it online with everybody. You see, it's just like I always tell people this, okay? There's two types of father and son relationship, whereby the normal is whereby the father pass some money to the son to do business. And if the son basically fail in the business, usually they'll ask from the dad more money. But of course, the dad will ascertain and see whether this son is capable to continue doing business. And if the son is deemed not capable, the father will tell the son, look, you know what, maybe you're not in for this, you're not good for this. You should basically now move on to something else. All right, that's the typical father-son relationship. But there's another type of father-son relationship which you're seeing in the US, which is whereby the son is the one that runs the US economy, which is the parties involved or the president involved. And the father is the Federal Reserve who just basically keep on printing non-stop for the son. So practically, it's all right. In my opinion, basically the son is buying his way out of this entire problem. With $36 trillion of this trade deficit, and they're still printing at a speed of $1 trillion per 3 months and paying at about 5% interest at the moment right now. I just cannot see how it will last. But that's the reason why I can safely say that a lot of people now are turning from bear to bull, right? And they are buying into the market regardless. And you can see that the article, the video that I just shared recently on my YouTube channel, there's so many analysts who predicted the S&P will basically go down this year. They called for sell in the start of at the December last year. They were all wrong. They came back in March and basically changed everything. And then they look at the highest was 5,400 for the S&P. And back then, the S&P was only at 4,800 and 4,900. So you can imagine they gave a 10% upside to the market. And yet we're now at 5,600. It's like beyond any analyst call. So to me, it's like, if you ask me, all right, I cannot find myself on buying, okay? But my indicator on the screen right now, you can see, is still showing the buying is still there. You can see that since the June until to date, the boys indication is still on the buy side. And you can see that the white line shows that the buying interest is really, really very strong and it's still mounting up as we are speaking right now. So the momentum is also very bullish. So you can see the boys are buying, the bullishness is there. So I kind of like, flabbergasted here, but my indication tells me there's still more upside to go. But then again, I will watch this very closely because if my indicator do turn around, then I think that it's time to get out from the market. All right, so I can tell you this, fundamental, I think I'm going to stay with you, Ben, that it's really, really at overbought or overvalued situation. But if I don't see the boys selling on my screen, it's going to be very slap in the face, because you can see over here, that was back in April 2024, where the Dow was something at about 40,000. Oops, sorry. Okay, so sorry, my bad. The thing just jumped a little bit. Let me just clear up my screen a little bit. Okay, so you can see that back then, the Dow was at 40,000. Okay, and a lot of people have been buying. And okay, we have the same thing. Everything was good. Then suddenly the Dow reversed course, and from 40,000, it traveled down all the way to about 37,000. That means it lost nearly 10%. Nearly 10%. And then, as you can see, my indicator turns green over here. That tells us that we might be near a bottom, a temporary bottom. And after that, you can see the figure on my screen, 37,762, gave a very strong base. And then the boys indicator comes in, and that was a buy all the way. So, basically my system works. And I can only say that we just have to trade with the boys. It will be better than we put a fundamental in. But definitely, right, in what we in Chinese will say, 留个心眼在, that we know that the fundamental, it doesn't really help. It doesn't tell us that the economy could continue. But at least now the chart is different. So you look at the gold, it's the same picture here as well. A couple of days ago, all right, a friend of mine was asking me about gold, and I gave the same answer. I said that, look, my indicator is right here. It's blinking, as you see on screen right now. And after that, we have a combination of the colors turning yellow, then the KSI turning green, and the KCX turning black. Now that basically was with a star alignment, and we say that gold will be going higher. And back then, the gold was trading at 2330 level. And after that, gold just went all the way to the moon, as what I could quote you, all right, to 2430. That was a very good run for $100. So you can see my point. I rather say that, right, we know the fundamental from you, right, we combine this with the technical side. I think that will give us the extra edge in the market. Don't you agree with that, Ben?
Absolutely. Absolutely. Yes. That's why I will not miss a session with you, KEL.
So now I hear you, I heard you so much, and I strongly believe that now we know that the economy is really not doing well. We have the US dollar might be going down. I think all this, if we combine with chart, right, like the TWB crazy system, that will give us a very, very strong edge, over people. Right, thanks, Ben. This is an hour of session. I know that you have a lot to share. All right, but again, because we're going to keep the session tight. So what happened is this, Ben, I have decided to invite you for one more session. I'll work with you on the site. We'll talk a lot more on the Ukraine side itself, and hopefully that you'll share a bit more on silver too, because there's a request on the comment section. They want to know about silver, and I remember that you're a silver bug also, right?
Yes.
Yes. And just before we go for this session, give us a number. All right, we just did a calculation on gold, potentially going to 3033. So now silver price is trading approximately at about 20. How much is silver now?
$31.
$31, right? Yeah, and I remember back then at $22, we were so bullish on at 22, right? We said that let's buy silver. Don't care, don't bother, just buy silver. All right, so that's 31. Give me a number. What do you see by the end of this year, 2024, silver will be at what level before we end the session?
By the end of this year, possibly, yeah. There's no guarantee, of course. Possibly,
Of course, nothing is
$40
guaranteed.
and
Right?
beyond. Yeah,
$40.
$40 and beyond.
Wow, that will be like another how many percent? 30. But yeah, it's another like 30% from where
Not
we are right now.
surprising for silver, yeah. As
Okay,
you know,
then
silver
I'm
can
gonna speak to my
run
wife on this
further.
right now.
Right.
I'm gonna speak to my wife to
I'm
get
bullish on
something more silver.
Yes.
Okay. All right. Thank you, Ben, once again. This will be the session part 1 for this time. We will hope to see you once again. All right. For those tune in,
Thank you,
this is
Kel.
Ben. All right. Take care. Have a great day.
All
Time
right.
for lunch. Bye-bye.
Bye-bye.